Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 5th of May, comes to you from London. And the big move overnight is that US interest rates were raised by 0.5%. That was the top end of the range. It was whether it was going to be a quarter or 0.5%. It was 0.5%. That's the biggest rise in 22 years. So we're seeing really that interest rate environment changing, of course, and that is going to have an effect on markets. So looking first of all at the dollar, of course this is a driver for the dollar, as strong interest rates in the US, and strangely we saw the dollar actually falling away. It quite often happens that the expectation is bigger than the event. And so when it happened, we saw the dollar fall. So we're just short-term bearish there, but of course the long-term picture for the dollar is still very bullish. Remembering this is my weekly, my daily, and my 60-minute, my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. And these tracker charts just track as I go through. I'm running here on Refinitiv Icon, but I could easily be running on Bloomberg, and we're up to 30 different data sources and Updata that you can run into your system, so it's agnostic as to where the data is coming from. Looking at the euro, we're seeing here that we are sinking lower. We did jump, of course, on that dollar fallback. We've got a little bit of a relief rally going on, but we're still at the 105.86 level. It's still pretty low, and of course, if we now go below this 105 level, we break a critical support level, and the target suggests that is going to happen. The yen, of course, also just saw the dollar just falling back a little bit against the yen, just no big surprises there, and sterling sitting at 125 still, so no changes there. Big news, of course, today for the UK market is that the Bank of England is almost certainly going to raise interest rates, more likely 0.25% in the UK, but the fact is the market is expecting that, and that is keeping sterling a bit stronger today. And against the euro, we're sitting at 118.36. Interestingly, no signs yet that the ECB are going to raise, but we'll watch that space. Bitcoin sitting at $39,500, just back to short-term bullish, and just really teetering along the cloud here for support, so on the weekly, so watch that. US stock market strangely reacted quite positively to the interest rate rise. Normally markets don't like higher interest rates, but the reality is that's the relief rally that we're seeing, but we're still bearish on the medium and short-term charts, and the long-term we're just touching the cloud here, downside targets hanging over us, and we've still got this 20% downside on the 0.5% chart. The Nasdaq similarly jumped, but interestingly, again, we've got this downside target, some 18%, 24% lower, so markets still set to fall, and we're seeing the futures today down 0.4% for the S&P and down 0.6% for the Nasdaq E-mini. So the reality is we're probably going to see a lot of that move yesterday unwound, and of course the VIX volatility has come lower as well, back to 25.9, but the reality is again that this has just been trending higher, and each time just spiking above that 30 level on the fear index. FTSE future is up 1.3%, looking quite relatively strong actually versus many of the other markets. Shell numbers out today, so that's going to be quite key, and they were better than expected. Looking at the DAX, we're up 2% here, so a relief rally there as well, and the same in Paris. Japan and Hong Kong were down. India was up 0.2%, and the Aussie market up nearly 1%, so quite interesting there. We'll look at the energy mix in a minute. We're seeing soft commodities still looking pretty strong. Corn made a new high, remember, and that is actually still very much the key there. Gold also just pushing higher, back to this 1900 level, pretty critical for gold. Puts us back into short-term bullish territory, and so we're bullish on all three time frames at the moment. Silver actually not doing as well this morning, but is actually back above the cloud in the short term. The medium term has just wandered below, and platinum is the most bearish of the four precious metals still bearish on their medium and long-term charts, so they're recovering a little bit there. Copper also fell away recently, just sort of breaking to the downside, but we're seeing a bounce now and a recovery, so that is looking a little bit better too. And the long-term targets for copper are still 20 and 40% higher, so really quite key there as well. Looking at US 10-year yields, we're sitting at 2.96%. That interest rate move yesterday in the US is kind of expected, so we haven't seen a great reaction there, and so that's quite key. Looking at the energy mix, I was just looking at this chart this morning, which I'll post on LinkedIn, which is WTI breaking out. This is WTI crude, the US crude contract, breaking out of the triangle pattern here. The same is happening with Brent crude. Interestingly, we're hearing a lot more about refined products, and RBOB gasoline also has broken earlier and running, so that's really quite an interesting chart there. But taking a look at the crude oil chart, we see here Brent crude really now starting to break. That's quite key. Yesterday's move significantly takes us out of that triangle, and the rule of the triangle, of course, this is an ascending triangle. It's a consolidation pattern, but normally about the height of the triangle, so we will be looking to new highs. We've got this target here on the 0.5% chart that will be activated at 114, so keep an eye on that. We've got a target to 118 here, and then on the very short term 1 minute charts, 113.30, 114.30. If you're trading crude oil, these 1 minute charts are absolutely essential. Looking at US nat gas, we made a 14-year high yesterday. That continues today. We're really just looking strong, and we will be putting out a report to clients on just how high US gas prices can go. Coal sitting steady at 240. Emissions just struggling to break this 90 level, and that's the level that we critically need to break. We do have an upside target of 92, but we do have a downside target to 83. So, and we've got the same on the 60-minute chart. So we're seeing that emissions at the moment, we're neutral out to clients today. Again, just could go either way. We need to watch for that break of 90 euros. Gas prices a little stronger today. We're seeing TTF up 3% and MBP for the first time in a while actually moving by the same percentage amount. So gas prices starting to cross this downtrend and looking higher again as well. German power, we made the 220 level. This was a target we gave to clients in our report on the 23rd of January. You can go and look up that report, of course, in the special energy reports here, and we've got this how high in energy special reports, how high will German power go. We did put out a new report yesterday. This was the one on 23rd where we gave the report title target of 230, 220. Those targets actually met in the report, so you go right to the end here. Targets 220, 200 to 220 euros. We hit 220 yesterday, and that was when it was at 152. Now we've got a new German power report out with all the trends and targets on the last page, so take a look at that in your systems if you're on Enterprise. That's it for today. Until tomorrow, happy charting. See you then.